Hello and welcome to this short video series based around financial planning when moving to France. For those of you that don't know me, my name is Tracy Leonetti. I'm a relocation expert based in the south of France for the past 30 years. And when I came to France 30 years ago, I struggled through the different paperwork processes, getting the right visas, getting healthcare in place. Really, it was a bit of a nightmare, to be quite honest. And that is why I decided in 2012 to create LBS, because I decided it shouldn't be that difficult. And I wanted to really help people like yourselves who are moving, living, or creating a business in France with a smooth transition. And in 2016, I created the Serenity Club, which is basically a very hand-holding service that we do for our clients on a yearly basis, and we help them before they move to France on their visas right through to the renewal of the residency cards a year later. Because I find that most people have questions, lots of questions. Generally speaking, for me, of course, it's about visas, immigration, healthcare. But I also think it's really important to think forward about planning your financial situation, okay? Because although we might think about the paperwork, we often neglect a little bit the financial perspective of moving to France. And that was really the key aim behind this short video series. This is video 3 out of a series of 5 that we are covering. Some of those important questions to give you clarity on your move to France from a financial perspective. So in the last video, we focused our discussion around a really important subject, succession and inheritance rules, and the big differences between the two systems between UK and France. We also touched on the UK wills versus French wills and how to go about changing that. For me, it's a real eye-opener every time I hear this subject. And of course, I do hear it a lot because, I go to the various salons and events. But it never ceases to amaze me how complicated it can be. So do go back and watch the replay if you missed it. And of course, reach out to myself or Simon here if you need some help on that. In this third video of financial planning, we are really looking to build awareness around your investment planning, because like we said in the last video, there are solutions. If you need solutions to your investment planning, then there are some that are existing. So this particular video is about what solutions could exist for the family who are moving to France. Because ultimately, and I think Sam will agree with this, we want to really help protect your hard-earned money. It's hard to come by, so why would we want to lose it? So again, to help me with this, I have the pleasure and honor of introducing Simon Eveleigh, a partner at Blevins Franks. He's based in Aix-en-Provence, but of course, worldwide, like we all are. And, please, Simon, go ahead and present yourself to the people watching the video.
Yeah, as Tracy said, I work for a firm called Blevins Franks. We're a wealth management company, and we provide advice to, in the main, British people, but not exclusively British people, who are looking to settle in France. We work in other jurisdictions, Spain and Portugal being our other major 2 markets. We're talking specifically about France. And our main raison d'etre, if you like, is to help people transition out of the UK system into the French system, understand what the French system means for them individually, and make sure that they make maximum use of any opportunities before they leave the UK and after they arrive in France, so that your longer term financial planning aims and objectives are met once you're living in France.
Excellent. Thank you, Simon, for that. So a reminder for those that are just joining us now and haven't seen the previous videos, I have focused our questions around a family that we see happening quite often. Certainly I do, for people who move into France for visas and paperwork. So we've got Mr. and Mrs. Smith, who are a married couple in their second marriage with children from previous marriages and a child together. They all have a property in the UK. They have bought a property in France. We also have one of the grandparents coming with them, but it could be a different scenario for you, of course. They have a UK will, and of course we discussed that in the last video. We have the Grandad Smith, who will have private pensions, state pensions, and some ISAs, and so obviously we'll be looking at some of those questions in this video. So let's get this kicked off a little bit, Simon. Let's say, for example, let's start off this with a kind of a planning question. Mr. and Mrs. Smith maybe have worked in the UK for many years and have a UK financial advisor for a good 20 odd years, good relationship, a very good portfolio with lots of ISAs. Can't they just keep their current portfolio when they move to France?
It's not out of the question to keep the UK portfolio, but there are many reasons why it probably isn't sensible longer term planning. I mean, the first thing to say is that as a result of Brexit, because there was no mention of financial services in the withdrawal agreement, advisors no longer have the regulatory right to advise people who are living in the EU. And even if somebody says they can sort of help you, you've got to be careful because they probably don't have much, if any, knowledge of the French system. And leaving aside the regulatory aspects of having your UK advisor look after things, the other things to think about are your investments in their current form the most tax efficient for you living in France? For example, and I did mention this in one of the earlier videos, when you are working in the UK and you've got spare cash and you're saving into an ISA, that is a very, very tax efficient way of putting money aside for later in life, because you have an annual allowance. You can use your annual allowance. Each member of the couple can use their annual allowance. You can build a tax-free portfolio, and when you come to access the money, you don't have to pay any tax on the money they're drawing out. In France, ISAs are not recognized as tax privileged structures. They are just investments, and they suffer tax. And the real problem is that if you've spent 15, 20 years building up a good tax-free portfolio in the UK, the French tax man will say, well, any gain on that from day one is taxable here in France. So you've got to be very careful. Don't just pick up what you've got and bring it to France and think it will all work, because there are many reasons why it won't. And then just one other thing is that usually a UK investment portfolio will be in sterling and probably will only offer sterling as an option. So if you want something that fits more for your longer term new life in France, then you want something that, even if you invest in sterling to start with, at least offers you the option to switch to euros at some point in the future, because your day-to-day expenditure, your coffee and your baguette are going to be paid for in euros. Long term, you want more of your assets and your income probably in local currency. So lots of reasons why keeping hold of a UK portfolio might not be the sensible thing to do.
Yeah, so it seems reasonably obvious to me for this particular family in that scenario that, from what I understand, the ISAs are not necessarily tax efficient in France. So I guess, would you advise them for the majority of the situation? Of course, I understand that everybody's situation is different. So, probably advice on a case-by-case basis. But generally speaking, if you have ISAs, then it's probably best to get rid of those in the UK before you come to France. Would that be a reasonable suggestion, or?
Absolutely. I mean, you're quite right, Tracy. Every individual circumstance needs to be looked at on its merits. But generally, you can sell that ISA portfolio in the UK with no tax implications. You can then, if you do that, and then when you move to France, you can reinvest it's like an ISA. You want to have an investment portfolio, but it's in a tax advantage structure for French tax purposes. So yes, as a general rule of thumb, we would say get rid of the ISA portfolio whilst you're still in the UK and reinvest the proceeds as you make that move across to France.
So let's take that then to the next level, I suppose. I guess that's the way we should look at this. If they do divest of their ISAs in the UK, they come to France. I've personally heard a lot about the Assurance Vie type investment portfolio. Would that be something that they could reinvest in? And can you give us more information about that for anybody who might be interested?
Yeah, that certainly would be something that they could reinvest in. It's the vehicle of choice for French investors because it offers some significant tax advantages both during your lifetime and on your death. If we talk firstly about lifetime taxation, basically it's an investment portfolio held within a life assurance structure. And whilst you are not touching that money, it suffers no tax. So it grows free of taxation. And it's only if you decide to take money out of the assurance fee structure that you will pay any tax. And when you take the money out, what the taxman says is, well, some of the money that's being given to you is a return of your own capital. We're not going to tax you on that bit. And some of it is growth on that capital. We'll tax you on the growth bit and we'll tax you at a flat rate of 30%. So if you want a simple example, you invested, say you invested 500,000 and it's grown to 600,000. So, and then you decide, right, we're going to go off on a world cruise and we're going to spend 100,000 of gain. We're going to reduce our capital started. So in your heads, you've taken all your profit. The French taxman says, well, in actual fact, you've taken 100,000 out of a pot that's worth 600, 500 of which was your own money in the first place. So only 1/6 of that pot is gain. And then they apply that same proportion to the 100,000 you withdrawn. So 1/6 of that 100,000 is taxable. So in this scenario, 17,000 in round numbers is taxable at taxed at a rate of 30%. So this particular scenario, you're taking 100,000 out of the portfolio and you're paying about 5,000 euros of tax. So you can see it's a highly tax efficient way of building the money and then accessing it when you need to.
Well, that's a really, actually really good, like you say, tax efficient way of, investing money. And I guess I'd really like to kind of come a bit full circle back on I think it was video 2 when we talked about the inheritance and succession, and how can Assurance V be used to protect stepchildren and other beneficiaries that are not blood related. Could you go back onto that subject and see how Assurance V could help us with that?
Yeah, certainly. In the previous video, I talked about there being an allowance between parent and child of 100,000 euros, and then there's fairly manageable tax rates even over that allowance. But at the other end of it, the thing, if you're leaving money to somebody who's unrelated to you, which includes stepchildren, they only get 1,594 euros tax free, and they have to pay 60% tax on the rest. This assurance fee structure I'm talking about treats all beneficiaries the same. So if you've invested money before the age of 70, every nominated beneficiary can receive up to 152,500 euros free of taxation. So if we say you've invested the money in a policy and you've invested, say, 500,000, as I talked about earlier, and that 500,000 has become 600,000, and then you die, and you've nominated 4 beneficiaries to receive that money, irrespective of their relationship to you, they will receive their quarter share, 150,000 in this scenario, totally free of taxation because it's below the 152,500 euro allowance. I suppose I should just point out that those are the rules for money invested before the age of 70. The rules for money invested after the age of 70 are not as beneficial. There are still advantages to doing it. So, all is not lost if you are the wrong side of that line. But the inheritance advantages are not the same for investments placed after the age of 70.
Yeah, that's right. So effectively, that would, for like the scenario of Mr. and Mrs. Smith, because I'm just looking at the slide here, with their children from a previous marriage and who, of course, are stepchildren for each of the adults and their child together, the Assurance V could be a way of kind of, equalizing, if you like, that tax for the stepchild.
Absolutely, yeah. I mean, I'll refer people back to the previous video on inheritance, and there are various things that you need to do. You need to speak to a notaire about doing a will. You need to know what your assets are and what your aims and objectives are. But yeah, the long and short of it is that if you have in place an assurance fee structure, you can leave that money to whoever you want to, and everyone is treated the same within that.
That's fantastic. Actually, I do have a question as well that popped into my mind when we was talking about the ISAs and divesting of those ISAs possibly before you come to France being a good advantage. What about those that have come to France and didn't get the advice they should have and have turned up and now residents of France and still have ISAs? Is there anything they can do on that?
Well, unfortunately, if they're French resident, they will have some tax to pay on the encashment of the ISA. But nevertheless, probably still better to do it, even though there's a French tax bill to pay, because then you can reinvest in something that works going forward for French tax efficiency. And also, as we've just talked about, you can ensure that the money that's invested is passed on in a tax efficient manner on your death, because the ISA portfolio will sit fairly and squarely within your estate. Whereas if the money's reallocated to an assurance fee policy, then we're back to those rules I've just talked about.
Okay, excellent. That's fantastic. Okay, so what I don't want to take it any deeper than that, because that's really a lot of information, and it's already answering some really good key questions. So, I found that every time I discuss financial planning, I learn more. And I find it pretty fascinating, although I think your job is really complicated, Simon. So if you are watching this video and you are planning to move to France, and this is kind of sparked off some questions, some interest, some worries, then do reach out to Simon directly or to myself. We can make sure you get some support with that move. Because I know that people sometimes think that, oh, it's not for me, I can manage it on my own. Don't think like that, because it won't work. Another subject we're going to look at moving forward, we'll be looking at UK pension pots and whether they are tax efficient. This will be covered in our next video, so do follow us. Don't miss it. And if you've missed any previous videos, do reach out or check on online where they will be sitting for you to watch. I'd like to emphasize that much like visas and paperwork, there is often more than one solution, and there is no such thing as one solution fits all. And it really does apply to my clients across the board on paperwork. There are rules and regulations, but there is not one solution. And I think that possibly can be said for Simon as well with his clients. So if you do have any concerns or questions about any subjects in the previous video or in this video, then don't hesitate, reach out. Is there anything you want to add, Simon, before I sign off for us today?
Well, just very briefly, Tracy, yeah, you're quite right that there is no one size fits all solution. You need to seek the right advice for your individual circumstances. The other thing I would say is these videos that we're doing hopefully are giving people a flavour, but they are only scratching the surface. You do need to be talking to individuals who know what they're up to, and hopefully Tracy and I are demonstrating here that we do know what we're up to. You need to be seeking the right advice and making sure that you get something that fits for you and those of your family.
Absolutely fantastic. That is so true, Simon. So thank you again, Simon, and thank you for everybody for following. And if you've enjoyed this video, do please share it and follow us. Okay, and we will see you in the next video when we'll be talking about pension pots. Okay, thanks a lot. Bye bye.